The breakthrough agreement between the United States and Iran to reopen the Strait of Hormuz has boosted hopes of lower fuel costs and improved airline profitability. Oil prices have fallen sharply following news of the deal, with Morgan Stanley cutting its Brent crude forecasts and predicting a faster recovery in Middle East oil flows. Airlines could benefit from lower jet fuel prices and, eventually, the restoration of more efficient flight routes between Europe, Asia, and the Gulf. However, significant risks remain. Shipping traffic, insurance markets, and energy infrastructure may take months to normalize, while negotiations over Iran's nuclear program and sanctions continue. European lawmakers have reached a provisional agreement to reform EU passenger rights after more than a decade of negotiations. Passengers will continue to receive compensation for delays of more than 3 hours, while new rules will guarantee free carriage of a small bag and require children to be seated with accompanying adults at no extra cost. The airline industry is unhappy with the outcome. IATA described the package as a reform in name only, arguing it adds costs without addressing the root causes of delays. Ryanair warned the changes could lead to higher fares and renewed calls for air traffic control reform across Europe. Norwegian has agreed to acquire Nordic leisure travel group in a deal worth approximately $845 million. The transaction will combine Norwegian's airline operations with major holiday brands including Ving, Spice, and Sunclass Airlines, creating a fully integrated Nordic travel group. The combined business is expected to serve around 30 million customers annually and generate a 50% increase in group revenue. Norwegian says the deal will strengthen its position across Scandinavia while creating new opportunities to sell complete holiday packages alongside flights. Delta Airlines has secured a new $2.65 billion revolving credit facility. The facility replaces Delta's existing 2023 credit agreement and provides additional financial flexibility for general corporate purposes. It includes both 3-year and 5-year tranches and can be expanded to as much as $3.65 billion through an accordion feature. Importantly, the facility was completely undrawn at signing, highlighting Delta's continued access to substantial liquidity and bank support. Swire Pacific, Cathay Pacific's largest shareholder, is issuing $600 million of exchangeable bonds linked to its Cathay Pacific shareholding. The zero-coupon bonds can be exchanged into approximately 356 million Cathay Pacific shares, representing nearly 6% of the airline's issued share capital. Swire says the transaction provides attractive funding while allowing it to retain a significant long-term strategic interest in Cathay Pacific. The company also confirmed it has no plans to make material changes to the airline's governance or management structure.